Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the week ahead. Today, we're going to outline what's happening in the markets right now. We're going to talk about sort of the week to come and the key events that we're going to watch. We also got a couple of trade ideas that we need to update, and really a lackluster Monday on Wall Street. It shouldn't be any surprise. This is a lot like the price action we saw last Friday with the Putin-Trump summit. I don't know if anybody saw those highlights over the weekend. That was absolutely crazy. But today, you've got Vladimir Zelensky, the president of the Ukraine, in Washington, D.C. to meet with Trump along with other EU leadership. As of right this minute, they're running about an hour behind. It looks like EU leadership rolled in about an hour late to the engagement. So we don't really know when the talking is going to start. I think it's going to start supposedly right around noon, my time, so right around 2 p.m. Eastern, 2:15 Eastern. But I don't know what to expect out of this. A lot of folks really believe that this is the last chance really for peace in the Russia-Ukraine situation, at least in the short term. So we're definitely watching it. We've got a big time, what I would say is the big mover shaker is going to be your crude oil, but your crude oil is sort of a crazy price action. This is really a strange day to trade, and this is one of the reasons why I typically am sitting on my hands for a Monday session. I don't like getting involved early. I don't like spending a lot of money until I see the ranges set up and everything's set up real nice. But I will say that there's a lot going on in the market, even though the price action is real sluggish. I could easily see where you could get chopped up today, especially trading something like an opening range breakout. I'm going to break you down an orb on that US 30 chart. We're going to go to that. We got two trade ideas that we need to look at. One of them successful. One of them looks very good. The other one is just sort of getting started there with the dollar yen. So I want to welcome everybody back to the trading room this week. Tuku, good to see you. Tuku, Lita, always a pleasure. Lita, Gordon Williams. All right, Gordon. If there's any questions at all, guys, today's the day to ask them. I'm taking pretty much any question that you want to ask, fire away. And if I can come up with an answer, or if I understand the question and know the answer, I will pass it right along to you. If I don't, I'm going to have to probably tell you, you might want to check out some ChatGPT or some AI folks to get you involved with an answer that you can use. But right now, this is it. This is what we're watching. We're watching it closely. I've been monitoring this situation all morning. You've got Trump and Zelensky will meet to discuss Russia-Ukraine war. Live updates. I mean, we're just running late. We're running about an hour late. And anytime there's this many egos involved, somebody's always late. And it's either one president or the other president or one group of folks or the other group of folks. Somebody always runs late. It seems like these things never get kicked off on time. And a lot of that has to do with the security involved. I mean, the security around the White House in D.C., awfully tight. So procedures are followed, and typically if you figure you start running a little bit late in the morning, maybe 10 minutes late, that turns into an hour, which could turn into much, much more down the line. But right now, the Chiefs have not started talking yet, per se, or as they say, I used to say in the Old West, the folks are just sort of waiting to get any sort of comments going, and we don't know what's going to happen. We got a pretty good idea what's going to happen. I'm going to sort of float what I think is going to happen here today. I would be surprised if anything good comes out of today. I mean, we've already seen some real strong rhetoric out of both sides, real strong rhetoric out of the United States, Trump towards Zelensky. We've already sort of heard that they rejected some of the points that were made on Friday about ceding a little bit of land there to form a demilitarized zone. That seems to be a non-starter. There was also some demands for the Ukraine in there that don't look like they're going to go. So what can we say about all this stuff? All right, Poly market, the biggest really share buying market in the world, especially on different events, not just market stuff, but these types of political events. Right here, you've got Russia-Ukraine ceasefire in 2025. Right now, the no's have it by about 65 to 35. Everybody's sort of betting no, and that's for the rest of the year. So they say there's a 35% chance, but that's down about 29% just in recent history. And the reason why is some of the terms of this peace deal got leaked out of Friday, and it doesn't look like that this is going to take shape. Now, I'm not getting down on anything. We don't know. Nobody's talking. But it looks to me like this is going to be maybe the beginning steps of a prolonged process, which is great as long as you're on the road to peace. But don't be surprised if we see more fireworks today. Word around the campfire right now is that Zelensky's been ordered to show up to the White House in a suit. And if he doesn't show up in a suit, the meeting's off and they're going to have a big show and they're going to send everybody home. So this is high stakes stuff. I don't know how it's going to go. Nobody knows how it's going to go unless you're in that room or you're on one of those negotiation teams. So just sort of you got to buckle up and be ready. We got a couple trade ideas that I think are going to be pretty good ones, but today could be a tumultuous day on the market. So be very, very careful as we go towards the U.S. close coming across the board in about 3 hours. Be careful. Be careful because the wrong thing gets said, these markets could tank. The right thing gets said, they could rally. And then also you've got commodities, which are going to be all over the board. So that's sort of my spiel today on the Russia-Ukraine situation. Dominated the news cycle all weekend long. I was I was up in a cabin in the woods visiting with family and friends, so I watched it on replay last night when I got back, but definitely was the number one market driver, no question about it. Let me see Michelle. Yeah, hi, Shane. This is Bobby Bob. Good to see you, Bobby. Team Marina, good to see you, Team Marina. Welcome. Yes, sir. Hey, I'm late. What did I miss? Just a little bit of talk on Russia-Ukraine. Tina Jing, good evening to everyone from the UK. Good evening, Tina. Welcome. No matter where you're at, if you're in the UK, if you're in Africa, if you're over in Asia, if you're down under, that's probably the middle of the night down there, down in Australia and New Zealand. But that's okay. You'll catch this when you wake up on demand. So good to see everybody. Abdullah, hi Shane. Good day to you. Can you advise the best trading strategy for a swing trade? More like a set and forget approach. I'll tell you what's a pretty good one. And that's our 920 crossover on like a 4-hour or a daily chart. That's a pretty good one. That's one that I would be looking into if I was an active trader eagerly searching for a strategy. All right, guys, welcome to the Switch Markets community. We're still in the process of melding the how to trade learning with the functionality of the Switch Markets brokerage service. We've got a lot of content coming your way, so stay tuned. A lot of you caught the how to manage your moving stops or your trailing stops there on that MT5 platform. That short we put out Saturday. Got a lot of great feedback on that, so I'm glad you liked it. If you haven't seen it, it's over there on the Switch Markets YouTube channel. Go ahead and check it out. Dave, F19. Hi, Shane. Hi, traders. Hey, everybody. Back in the saddle for a Monday. I love it. All right, guys, trade update. This is one that we put out the other day after PPI. It was on Thursday. PPI comes in hot. Ethereum level coming up. Well, in all actuality, I had a typo, and I'm making mistakes. I made 2 mistakes last week that I'm really surprised I made. And what happens is we get going, we push a lot of content, and when we do that, sometimes we just miss things. And right there, I clearly have the next level in at 45.55. It should have been 43.55, 80 pips up the queue. But if, in fact, you were just watching that and you didn't already take the profits on this trade, that's okay. It's starting to look pretty good. Thinking that maybe we picked a weekly low already on Monday. Let's go ahead and get out to price action. This was just a basic Fibonacci retracement trade. Spike low right there and a spike high and a pullback right through to our 42, 43 area. I wanted to be very aggressive, and I made sure that I got us in there somewhere right around 42.75. I wanted to be very aggressive there. Right now we're trading about 43.23, 43.25, which is about 50 pips up the queue. But if you do want to look at short-term price action, this trade was very good to us. Came right down, saw some nice hesitation. We sort of got entered just perfect back on the 17th, which was yesterday. Nice rally right there, which went up to 43.50. Not really the move we're looking for, though. Then we came down. We sort of failed during that European session, during that London session. It's been a pretty good rally for Ethereum. So right now we're sort of in a holding pattern. I do like the way this trade's unfolding, though. You could have probably already got paid off. We went up to about 43.70, which gave us a shot at about 100 pips. But I did have a bit of a typo in there. So if you are sitting around waiting for 45.55, you could be waiting a while, but the 80 pips, that's already been banked off of a real strong support level. So I would say whatever you got to do, you got to do. I do believe, I'm confident that we'll have a chance potentially to get back up to the top of market structure, which is right up around 45.55, maybe somewhere up in here. It just isn't what I had in mind for that trade. It isn't what I had in mind for that trade. I wanted to hit this for a quick scalp and get out, but somewhere maybe right up in here, 45.50, somewhere in there. That would be sort of the top of your 30-minute market structure, and that was established on the 17th of August, which was yesterday. So right there on the open. Could we get up that high? Absolutely. We could get that easily. Right now, the market's just sort of calm. I really like weekly support levels, though, and that was a darn fine one. So if you got those 80 pips, congratulations. If you're still taking a position and waiting, that's fine. Do what you want with it. My point is this, is once you see price, if price does break down from these levels and wipe out sort of our daily low and trend a little bit further south, you got to be very, very careful holding longs. You could get into big trouble doing that. Let me see Joshua Chung. Hello, Shane. Hello, everyone. Now, this second trade idea that we have out is going to be just our vintage 920, and this is real simple. This was a one that I put out a little while ago. It's a 4-hour 920 EMA crossover for the dollar yen, and our entry point needs to be close to that bar close right there. You can see sort of our big coded 920, and this on this 4-hour time frame. This would be a pretty good this would be a pretty good strategy to take a look at. Now, on a 4-hour time frame, I'm not convinced at all that we need any sort of confirmation with RSI. I really suggest that RSI as confirmation for this crossover, that needs to be on short time frames. Think 1-minute chart, 5-minute chart, maybe even 15-minute chart. But honestly, 30 minutes, 4 hours dailies. I would just work with the crossovers and sort of just figure that you have enough stop loss there to sort of position yourself for a big move. This is a swing trading strategy on a 4-hour chart. There's really no question about it. Unless you maybe time up a big time economic event and get a big robust move, then maybe we could sort of say, okay, well, it's sort of a scalping strategy. But on this time frame, on a 4-hour chart for a 4x pair, probably going to be a swing trade. You're probably going to be in this multiple days, I would think, at least during an overnight, at least one overnight. But so right here, the question really becomes, okay, how are we going to set this trade up? Well, our bid was right there on that bar close, so that's where you wanted to get long. So that'd be 147.73. You can see we got a rally up there to about 147.98, which was a real nice initial move. So our key level, we got resistance up there at 148. I would say right now you could probably take the trade again on a secondary entry. It really wouldn't bother me too much. So we're going to go ahead and send a buy here, and we're going to monitor this for the next several days and see exactly how this pans out. This, to me, would be a vintage swing trade. This would be a swing trade, and I kind of like this type of setup because, yes, it's true that the United States-Ukraine EU summit could bring some price action into the equation and maybe crash the market, maybe. More than likely, you're going to see quiet conditions. And this week, we're going to go over the week that is, the week ahead. That's the name of this stream. But you'll see that there just isn't a whole lot on the docket for us, at least facing the dollar or the Japanese yen, that's going to shake really the foundations of this valuation. So if I was setting up this trade, we've got our entry point. Remember, every trade has 3 parts. You got 3 parts. You got an entry point, a profit target, and a stop loss. Where would my stop loss be? We do have options. We've always got options. You could put your stop loss right beneath this swing low, and I really wouldn't have a problem with it. The low down there is 147.12. That's sort of a tight trade, I would say, because you're right there, about 59 pips between our entry point and our stop loss. I probably would like to target that swing low, which is going to be, probably Friday's low, Friday's bottom. That's going to be pretty good. So right down there, your low is going to be 146.73. So this would be risking about 100 pips if you do put it right down here. I don't have a problem with that. The real question is where are we going to shoot? Where's our profit targets at? Well, there's a couple ways to design this trade. If you put your stop loss beneath this swing low and give this trade more time to work, you're going to have an opportunity maybe to get 100, at least a 1-to-1, guys. For me, at least a 1-to-1. So what would that really be? Probably like a 148.71, something like that. Not too bad of a trade right somewhere in here. It's not exact. Be sure to dial these things in exact. But something like this could be pretty good. Could be pretty good right there. There's your profit target. You sort of need to get right above this liquidity grab, which is right around 148.77, something like that. But take a look at what a lot of traders are going to try to do here. There's going to be a lot of position trades. Sort of goes back to Abdullah's question. What's just sort of a set it and leave it type of a trade? This would be it. You'd be looking for a return back up to that 150 zone, maybe 150.43, or excuse me, 150.73. If that's the case, you're probably looking at about a 300 pip return. So 300 pips, and we're risking 100 pips. That would be probably your 1 to 3 banger that a lot of folks are going to be looking at. That's a straight up position trade. And all you're really doing is you're using that 4-hour chart. You're using the 920 crossover just to place a bet on the US dollar against the yen for the rest of the week. Given our economic calendar, we may be in pretty good shape to get this trade done. We just got to wait and see exactly what happens. You could even extend your stop loss down here if you wanted to beneath last week's low, which is down there right around, let's see, that low is 146.21, so you'd be risking about 150 pips, something like that. I don't hate the trade. I really don't hate the trade. It's just you got to make sure that you get paid for your risk. Remember, 1 to 3% of your trading account on any given trade. This one right here, probably you could put a smaller amount on it because you'd be shooting for a big-time payoff to the top side. But remember, something's got to drive the market, and this economic calendar coming up is probably a pretty good one to watch price go in our favor for an extended period. There aren't really any key economic events in there that are going to shake up the dollar-yen, except for maybe the FOMC minutes on Wednesday. And we're going to talk a little bit more about that. Let me see. Hey, Mew, greetings of the day. Good to see you. Welcome back. Yes, sir. So with an EMA crossover, you don't need confirmation on the 30-minute time frame. I don't believe so. Now, if you want to be careful, and if you want that added layer of sort of insulation against choppy price action, then you probably could go with the RSI on a 30-minute. To me, my basic premise would be this. On a 4-hour chart, I'm not going to worry about session. I'm not going to worry about anything. The only thing I really want to see is that crossover. And the crossover in itself is going to suggest that price has sort of changed direction, that the market condition is changing direction. So for me, in a 4-hour, I don't really need it. Now, on a 30-minute, if I was going to trade the 30 minutes, say 24 hours a day, I may want that RSI confirmation. But let's say I was going to trade the dollar yen on a 30-minute chart. I could easily start my trading day right during that Tokyo Open and still have a chance to get pretty good participation all the way through that London close. So as long as you're focusing on when exactly you need to be trading in open positions, say on a 30-minute time frame, you probably could get away with no RSI. Personally, I don't know that you need it on a 30-minute chart. However, you can see right here what happens when we get real flat markets, especially if we don't have a big move. These flat markets lead to frequent crossovers, and that's very, very important that you understand that. That can be a hard one. That can be something that really chops you up. So be very careful with that, especially if you're trading a 30-minute on maybe a flat time period, maybe the U.S. afternoon, maybe going right now. I mean, what do we have a 30-minute on this dollar yen? What do we have? Right there, you would have had a buy, so you'd still be long. So, I mean, theoretically, that's pretty good. I mean, as far as what you have on the chart right now, you would have been in overbought territory here on a 30. So, theoretically, you'd be playing a crossover and a retracement back down. To me, I would be surprised if we get that trade. Feels to me like we're just going to creep higher and higher. I like my 4-hour trade with no confirmation better. If you're interested in confirmation on the 30, by all means, use it. For me, I wouldn't worry about it. I really wouldn't. I think that your ranges are going to be pretty big. I think that your distance between your swing lows or your swing highs and your entry is going to give you a pretty good chance to succeed. So I would probably save confirmation for 15 5s and 1s, those real short intraday durations. I don't want to get too lost with confirmation. I really don't, because that can jam us up when we're trying to make decisions on the fly. All right, US 30 orb. Let's go ahead and set this one up for you. US 30 orb, this is fantastic, isn't it? We're going a 15-minute chart on the US 30. This should not surprise anybody right now. We're right at scratch. We're right at even. You can see right there, there's your opening. Let's see, that's your opening 15 minutes. Opening range breakout. This is the 2-bar strategy. There's your first bar. There's your second bar, and that's going to be your 15-minute range. Look at this. You can see right there, we went right up to that New York high and rotated back down into the center. Guys, this is absolutely indicative of a group of traders in a market that is sitting on their hands going, we don't know what's going to happen in the Trump-Zelensky meeting. We're expecting fireworks. We're going to wait. And this is exactly what it is. People are going to wait before they commit their capital. There could either be a bullish or bearish breakout on the way. If you wanted to trade this orb from here on in, I don't necessarily disagree with what you're doing. Just understand there's not a whole lot of track left in this race. Remember, 4 p.m. Eastern, the markets close, the liquidity dries up after that, and you're going to see really tough trading conditions more than likely in the next, I would say, after 2 hours, 45 minutes left in this session. I would be very careful. Very careful with this orb. As a matter of fact, with a big news day like we have today, a big geopolitical news day, I would be tapping out. I probably wouldn't be trading an orb today. However, that US 30 orb is there. Potentially might end up being a swing trade for you. I don't think that you want to do that. But if you want to play that orb, you know the rules. You're waiting for the first bar close outside of that orb range. Right now, we don't have one. We've just sort of ricocheted back and forth through the whole range. You see just the dead center piece of this range, 44,937-ish, somewhere in there. That's sort of an area of fair value. That's the game within the game right there. The buyers and the sellers don't really know what to do. And you can see that our volumes have absolutely dried up as the session's gone on. This is really difficult. I don't know that I would be trading an orb today. I probably would pass on that. Just like we talked about Friday, it was so choppy and it was so ugly that we didn't really want to do it, so we didn't. And I think there's a lot of wisdom in staying out of markets that you don't need to be in. And right now, guys, the US 30 is flat. The US 500 is exactly flat. US 100 is off just a little bit. Stay out of these market conditions as far as I'm concerned, unless you want to play rotation. Now, you can see this trade right here is a great trade. That's about 10:45 Eastern. Not bad. About an hour 15 into the session. Went right up there, tested that high, and that's probably what a lot of breakout traders thought. They were going to get their break, and then they would go long. They tested it. They failed. They rotated back down into the middle of that range. That's a fantastic scalping strategy as well. That's sort of that pendulum strategy we talked about. Also, that's just straight up playing the New York range and betting that it's not going to break. If you got that trade, that's short right there from that New York high. Pretty good. Pretty good work. A lot of that, the ICT kill zones we talked about. We put a few videos out on the ICT kill zones. They can help you sort of identify when to play strategies like that and when not to, just because it's all about timing the day and understanding value areas that form during different parts of the day. This is one of those where you'd be looking at that first hour in New York trade. This is an old-fashioned pit trade. I mean, this is back when they were in the pits, and the guys in the pits were looking around. They were saying, okay, there's no action in here. Nobody's yelling. Nobody's hollering. The big players haven't shown up yet. What's going to happen? What's likely to happen from the top of our market? And those traders would come in. They called them locals. Those locals would go on, and they would just take a little sell. They would take a little short position there, betting that the market rotated back down into that range, and then they would make their money, and they would be gone in just a few hours. That's how the old pits work. They would watch the first hour of trade and say, okay, what are we doing? Do we feel like we're going to break and go higher? Are we going to go lower? What does it feel like in here? Now, we don't have that luxury with the screen. The screen gives us really no clue of what's going on other than just watching price action. We don't get that sense of, okay, everybody's going crazy, so this market's getting ready to blow. We don't have that. So we've got to be very, very precise with our technicals, but also just stringent with our game plan and say, hey, listen, this is a flat market. We've got a news event coming later today. Maybe we're going to go ahead and play rotation or a reversion back down to the mean. What that would mean is sell the extreme right here, sell the top, and buy the bottom, and you're going to get an opportunity potentially to trade. Take a look at what's happened here. I mean, this is your opening range right here, right there. Boom, opening 15, second 15. We ran at the low, failed, rotated back up to the high, failed, rotated back to the middle. That is vintage. That is a vintage flat market. Those are the types of market conditions that destroy breakout traders. So stick with your orb. If the market breaks and you want to take it, fine. Just manage your risk aggressively. This market here, I'm guessing you're just going to get one swift move out of it, probably during power hour or after the Trump-Zelensky fireworks kick off. That's what I would say. All right, let's say we got a couple more questions here. I'm in the live chat. Hey, Mu, let's see. Great Britain pound, Japanese yen. Is it ever going to sustain above 200? Yeah, we'll go ahead and look at that one in just a second. We've got a couple other Forex pairs that we do need to cover on this live stream. A lot of folks are trading the Euro USD right now. I sort of want to weigh in on my opinion there. But yeah, Great Britain pound, Japanese yen. I'll pull that up and look at that. Let's see. XAU USD live trading, crypto indices, stock markets. Good to see you live trading. All right, that is quite the title. All right, this is week 34, 2025, trading week 34, 2025. You can see today, really no news out there to speak of. We've got a bond market, treasuries auction that I'm going to talk about in a second, but it's all about the summit today. That's exactly what we're waiting on. That's what the markets are waiting on. Tomorrow, Canadian CPI, have the Canadian dollar, really be looking at that, not necessarily exclusively, but you're going to want to have a look at the Canadian dollar. You're probably going to get some movement out of the loonie. We'll pull up the loonie here towards the end of the stream. Wednesday, RBNZ interest rate decision. Tomorrow, we're going to preview that. We're talking Forex strategy session. I'm going to get you set up, ready to trade the Kiwi. Also, UK CPI, EU CPI, and FOMC minutes. Wednesday is probably your headline event of the week, or headline session of the week. We're going to get you lined up and ready to trade that FOMC minutes. It should be an interesting engagement as we roll into the late week trade. Late week trade, Philly Fed existing home sales. I'm not anticipating it to be a big day at all. I'm really not. Philly Fed used to be a big number. It's not a big number anymore. Existing home sales, it'll be interesting, but I'm not necessarily going to, I'm not going to go crazy over it. But right there, Friday's interesting. Jay Powell due to speak at the Jackson Hole Symposium. Now, typically these events are sort of ho-hum economic events. They're like, well, it's just a party for rich guys, and it really is. It's over in Jackson Hole, Wyoming, a couple hours from where I live. But what I'm saying is a lot of times these bankers will get together in these symposiums and nothing will happen. About 2 years ago, Jay Powell came out at the Jackson Hole Symposium and basically said, we're going to get aggressive with quantitative tightening. And it was a short speech, about 6 minutes long, 7 minutes long, and it just blew the doors off the markets because it really represented a shift from quantitative easing to quantitative tightening in the post-COVID era. It was a big deal. I'm interested to see what Jay Powell says on Friday. I mean, we always are, but I'm curious. They're already talking about his replacements. Everybody's angry they haven't got a rate cut this year. I am fascinated to see what Jay Powell says. I really am. That could be a huge market mover. We will be watching. We may have actually pick up live coverage of that Friday. I got to see exactly when Jay's due to talk and what exactly can happen. All right, we have a few markets left. If you have any questions at all, be sure to throw them in and ask. I have no problem answering anything I can. Right here. Here's your Switch Markets Live, your MT5 platform right here. Nice real spike low on this Euro USD. Really beautiful market structure, sort of a bullish pennant setting up on the monthly. I like to start with my monthlies because it tells me what's going on in the market. You can see August has been a significant month, significant bullish month. So let's go ahead and dial this down to maybe a daily chart and see what's happened. So we've got a little bit of a pullback here on the daily. As far as I'm concerned, the Fibonacci retracements aren't necessarily going to be the ticket here. And the reason why is this market is absolutely flat on a daily. So before I would go any lower with, say, like a 4-hour chart or anything, I would look at this market structure and say, okay, what am I anticipating happening? Well, I mean, not much. I mean, we're just in very big rotation over the last 3 sessions. It's whipsaw, nice big rally, pull back on PPI, rally on Russia-Ukraine, or excuse me, the Russia-U.S. summit on Friday, and now you're coming back down today on the EU-U.S. summit today. It's just absolutely chopped, guys. I don't really know how we could step up and trade that effectively. One thing that I would look at is I would just grab me a trend line like this, and I would connect right from that swing low, maybe connect right up through there and see where we're at. Now, you say, Shane, there's a million ways to draw trend lines. A lot of folks disagree with the way that I draw them, and that's absolutely fine. Trend line reversals, though, the biggest thing that people make a mistake on is they get caught up in the minutia of drawing the actual trend line. Now, listen, of course you need to be as exact as you possibly can, but I can already see a few interpretations of where this trend line could be. Maybe right there, off of this low. And you probably would have drawn that trend line there about a week ago. And you just said, okay, what are the rules for trend line trading? Well, as long as you stay, say, above the trend line, you're going to be in a bullish type of a scenario. This pullback right here, this negative close, sort of suggests that we're in a bearish type of scenario, that we've broken the trend line and we could potentially go lower. So the real question is which one of these trend lines is correct? I would say either one of them is correct. I really would. I would say that this swing low to this swing high is going to give you your 2 touches. Your 3rd touch of that trend line is really what you need to be keying on, and that would have came on Friday, and now you sort of rotated up, and now you're down. And I think if you get a close beneath that trend line in the Euro USD, more than likely you're looking to the downside. So if you had this trend line drawn, say, I don't know, about a week ago or so, you would have worked right from that swing low right to this high, and you said, okay, there's my negative close, so I'm going to go ahead and go short. You're not wrong. The retracement went right back up to that trend line and now has come back down. So there's a lot going on here. If you're a trend line reversal trader, the biggest thing you got to do is just remember to manage your risk. So no matter what I did right here, my out's very simple. It's going to be right. It's not going to be there. It's going to be right above this swing high. See, that's the problem with MT5. It's not quite as exact for your analytics. Check out Pine Connector and your Trading View. Trading View definitely makes it a little bit different. You can see right here, though, you get all these things right there, and you go to properties, and you can dial this in just perfect. Go to parameters, 117.62 we want it somewhere right around 117.25-ish, somewhere in that area. We'll go 29. This probably would be my stop. It's too close. You need to pad that a little bit more, put it up in the 30s, but your stop loss would be right above that swing high, which is in effect last week's high, and then you're looking for price to rotate down from here. So you could definitely be looking at that type of motif. Is that too hard? It's pretty hard. I mean, trend lines aren't necessarily the easiest thing in the world. A lot of people believe they are. I see a lot of YouTube videos going, this is so easy. Here's my trend line strategy, yada, yada. It's all subjective where you draw your trend lines. So I say keep it easy. Connect 2 points and look for that 3rd touch. I would be working right from this swing low on the daily and essentially looking for a longer-term reversal that can get us in on maybe something that trades down in 115 and a quarter, something like that. That's what I would be looking at personally in the Euro USD. Now, if you don't like any of that, you say, Shane, I don't like any of that. I go, great, fine. Let's do something different. Okay, we're back to square one. Where else could we draw our trend lines? What about that? Is there anything wrong with that? There's your low right there. There's your swing low. There's your 2nd touch. There's your 3rd touch bounce. Now you're looking for a negative close. There's nothing wrong with it. I'm telling you, there's nothing wrong with any of the things that I just drew. It's just about when you draw them. So which one should we be working from? Should we be working from that one right there or the one that takes the whole move into account? The answer is it's up to you. It really is up to you. The stop loss area, though, is what I'm concerned about. That spike high right up above probably 117.30-ish. If that gets taken out, you probably need to bounce and just come back with a better retracement, or excuse me, a better entry point. I think that'll serve you much, much better, at least in the short term. So that's a good look at the Euro USD right there. Let me see. Kamejalo, good to see you. Hello, how are you? I'm doing very, very well here. Thank you. Alan, good to see you, Alan. Welcome. So this is sort of a good look here. Great Britain pound, Japanese yen. We had a question there. Are we ever going to see this thing rally and go to 200? And I'd say, well, you sort of are in that vicinity right now. This is a good look at your daily chart. You can see we had a Fibonacci there looking to get in and bid sort of that top side level there on a shorter time frame. But this area right in here, Not too bad. It's a big bullish pennant. Let's go on over to TradingView and see if we can get a little bit better look. Let's just stick completely with our with price action. Let's go no further than that. Okay, so pound yen. Let's go daily time frame. I want to go ahead and take a look at it. So what do we have? Okay, we've got some crazy stuff going on. Absolutely. Double top just set up here today. So the high right there is 228. What's your high right up there? 227. And since then, we reversed off down to 199.69, something like that, 64. You really do need to understand the importance of key levels. And I get a lot of folks I've taken a lot of critiques over the years, something about grandpa trading. Shane, that's grandpa trading. And I go, if you don't understand key levels, you don't understand the market. You need to understand key levels. And there's, guys, I've seen so much of this over the last 15 years. So much of this. I mean, 15 years, for God's sakes, 14 years, just about 13 and a half. So much of this, 200, and that's where the fight is. Right now, that's where the fight is in this guppy. Boom, 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 boom. What do you got? Well, we're sort of got a bearish situation as long as we're beneath 200. We can't seem to extend above 200, but I have to tell you, this is incredibly bullish in my view. You can see the nice big run from those lows, and now you sort of have that double top setting up. I would love to buy 198.29, something like that in the guppy would be fantastic. I would want to join this top side trend, make my mistakes to the long. The problem that we have right now is the market's flat, number one. And number two, that 200 level really is sort of acting like a ceiling here. So I want to see the market pull back to 198.29-ish, maybe 198.35, 37, something like that. That's a pretty good look at a real good, I would say, a value trade, a good value trade there. Now, as far as what could we do right now this minute, I wouldn't go to the shorter time frames just yet, but I would be ready to do just that. I think that once you go, say, to a 4-hour chart, this is going to give you a pretty good chance to play a breakout if you get one. So right here, pure price action, nothing but price action and key levels. It is really difficult to deny how important 200 is. Boom, right there. Nice high right there, 199.97. And what did you have? You pulled back, and then you sold off, and then you came back, and now we're just sort of fighting with it. Now we're just sort of fighting with that 200 level. So in my view, what I would be looking to do right here is probably, aside from buying that pullback, that's a pretty good trade. But on this 4-hour chart, let's wait. Now, once we get a break up above 200, then the game becomes really easy. We just watch the green candles come in, and then we buy breakouts, we buy pullbacks. So, as far as a trading strategy, 200's huge. Once we break it, then we'll look to buy pullbacks and get long. I would love to get that pullback before we break 200. I think that's a rock-solid trade. But for right now, I don't know that we necessarily are going to get it. Keep an eye out on your email inbox. You'll probably get a trade idea that's based on the guppy here relatively soon. Absolutely, Hamu. You're welcome. All right, guys, let's go ahead and take a look at a few others. Gold. I actually missed a gold message. I'm on gold the other day, so I felt bad and put something in the live chat. I think Ian asked about gold, what I thought about it. And Friday, head was going in so many different directions, I forgot to address the question. But as far as this is exactly what I think of gold, and I mean nothing has changed. Nothing has changed in a long time for gold. I think that this is indicative of the summer months, really the dog days and indecisive action out of traders in the markets. Market sentiment right now, you'd have to say, is sort of flat. We're not bullish. We're not bearish. This trend, you still have to respect, sort of the technicals and the crux of this uptrend. The long side commitments of a lot of traders are definitely being tested at 3,500. But we're looking for that big run up to 3,500 on our 920. I'm going to pull that one in a second for gold. But if you wanted to trade right now, I think you're going to have a bit of a tough time. So you can go to the intraday time frames, play strategies, 9 EMA, 920, whatever you really want to do on a 4-hour or maybe a 30-minute chart, whatever. But I'm just saying that it has been a really, really difficult 90 days on the gold market if you're a trend player, because the trends, they haven't happened. Now, the one thing I will say is this. We've been loading up just in front of 3,500 for about 90 days, and that tells us a couple of things. Number one, when we get the big break, it's not just going to be a little break. It's going to be a big break. And if, in fact, we do break over 35, I don't see any way we don't go to 4,000. But that area has got to break first. And once it does break, guys, this is a lot of compression. There's a lot of buyers and sellers right here. In my view, the whole world's going to get stopped out if price goes above 35, and you're probably going to get that top side momentum to 4,000. It's just a waiting game right now. And you realistically, and I hate to say this, but we could be waiting till the end of the year for this thing to break. I got asked about fair value the other day. Fair value, that's a chart that really does show you fair value. Fair value for gold right now is somewhere between 34.65 and 32.45. You're right in the dead center of really your summertime range. Very difficult to trade. If you wanted to go down to short time frames, say something like the daily, I don't care for it at all. To me, this market is flatlined. You'll notice that the Bollinger Bands on the daily chart are almost parallel, and they're tightening up. That tells us that there's not much action here. So you're going to have to see a break before you do anything. In my view, let's go down to a 4-hour chart. Yeah, you don't want. No, no. I'm not even really interested in any of this. We go to a 30-minute chart. What's today's range look like? It's just ugly. Right there probably would have been, well, it's the start of my trading day, somewhere right in this zone, about an hour before the open. I go about 8 a.m. Eastern to start trading gold. Typically, that's when we see the volumes pick up, at least with gold futures. But something like this, you're coming down. You get a bit of a retracement right there, 38%. So maybe you could say today's a negative day, but you're just right around scratch, guys. This is really difficult trading. I would stay out of this gold for right this minute until we get a break. And once we get a break, then we trade it. No question about it. All right, U.S. oil. Let's go ahead and look at U.S. oil here. Interesting move. We gapped down. We opened it wasn't a true gap, but we definitely opened negative, and the reason why was a lot of optimism. A lot of optimism surrounding today's Ukraine-U.S. summit. People believe that, you get a peace deal. We talked about the odds are U.S. oil is going to go down big. You already saw the bearish pressure, but you've seen sort of the buyback here during the session. So you're still off about 0.5%, but we've rebounded off of those lows, which are right down there. It's about 61.45. I would need some time. I got to see this market set up because crude oil for me, very challenging over the past several weeks. It really has been. These ranges are tight. That was a lot of fun trading that week, but these ranges are just tight, and they've been tight since that big banger towards the end of June. So something like this is just it really is a difficult proposition to trade. So we've got to be very careful with what we do. Right there, spike high. And then right there's a spike low, something like that. So if today's low holds right down there at 61.45, you've got a pretty good level that comes into play right here. Where? 64.93 right in front of 65. So what you would do is you got a EMA 13-period EMA up there at about 65.43. You got a tremendous opportunity maybe to step up and sell that right from I would probably say like 64.89s, maybe 64.75s if you want to be real aggressive. But this area right here more than likely is going to be legitimate topside resistance. I would be shocked if that number gets swept out of the box. So I'm watching U.S. oil, but I've got to see something. I got to see more prima facie evidence that we're going to get a move. I'm not necessarily sure that we're going to get a move. All right, it looks like we've got, let's see, are they speaking yet? Is the Zelensky speaking yet? There you go. So you've got a big time market mover. They're talking right now as far as what exactly could be happening. It's very choppy on Wall Street.
A couple of million people, a lot of people with soldiers and everything else.
I don't know if you guys got that audio right there.
People that have been displaced and forced into other areas and other countries because of what's happened. None of that would have happened. And I'm just saying that he was a horrible president, whether it was the borders or this.
All right, he's still ripping on Joe Biden. I mean, that's nothing new. Every time Trump talks, he rips
I can. Thanks so much. So, first of all, we have possibility now.
Okay, that's key. He's wearing a suit jacket. That's important.
States. We are thankful for this program and this opportunity. We are thankful for Europe. They pay for this. And through NATO program, for example, Pearl and etc., we have some programs where we can have some money to finance this. And this is a part, I think, it's not a part for the war and to defend us. It also will be a part for security guarantees, to strengthen our army, to rearm Ukrainian army. This is very, very important. And it depends how much money we need to rearm. For example, the question of air defense, we spoke about it with President Trump, and I'm happy that we have now bilateral decisions and we work on it with production, American production. Nobody in Europe has so many air defense like Patriots, for example. We need it very much, and this is also about defending.
Talking about rearmament.
Is we make the best military equipment in the world by far. You mentioned the Patriots. How good are that?
Systems.
We have systems.
All right, this is Trump just sort of coming back around full circle. Let's go ahead and get on out to that Great Britain pound Australian dollar. That I'm gonna have to break that down and see exactly what's happening there. But that's one of those that he's talking about. Zelensky's talking about rearmament, and that's not what they're talking about. They want the whole thing over. We will see very soon what exactly is the end product of today's meeting. Interesting stuff though. Zelensky did wear the suit jacket. He said they had the black on black shirt with the suit jacket. That's very important, guys. That was a big deal to Trump on that first meeting when Zelensky didn't wear a suit. So that's sort of a concession there in the middle. I think that's probably an optimist, maybe a positive thing. They're going to have a productive talk. Who knows? I don't know. I don't know. I won't even venture. Maybe next time we'll cover one of those live. I hadn't planned on it, but interesting stuff. So be careful if you're trading right now. Great Britain pound Australian dollar, Eli. What you got right here is you got a nice really spike low, spike high in the weekly time frame, and then a pullback right around 206.95. I'd love that. Right around 207. That would be a fantastic bid. As far as what's going on right now, there just isn't much action. Dollar yen sort of headed higher. Let's go Great Britain pound Australian dollar. If I could type, we'll get there. We'll get there, guys. Okay, 30-minute chart. We're sort of coming off a little bit as far as, what could we expect in the near future? Nice big volatility. I believe let's say you like the Great Britain pound Australian dollar for the week. Yeah, not bad. Let's back this down to a 4-hour and see exactly what we've got cooking here. Okay, really a fantastic bid signal on this 920 back on the 7th of August. Really puts you into a great trade for the entire month thus far. Sort of flatlining now, though, evening out just a bit. Let's go to a daily. Okay, pretty good stuff. This is interesting to me. I like this. Thank you for bringing up this pair. Remember, if there's any pairs or any markets you guys want to look at, go ahead and just give me a holler. But right there, spike low, swing low right there, swing high. So something like this, swing low to a swing high, and then bang. You're going to be right there. There's your pullback right around 207, and you've also got that 9 EMA. There's a lot. Yeah, as far as taking the bid right now, you could. Right there was probably your bid on the 920 daily, which is a nice swing trade. But if you did get that pullback down to like 207, maybe 100 pips down the queue, that could be fantastic. So we'll be watching this one definitely as the week progresses. All right, everybody, I'm going to go ahead and sign off here and check out the rest of this press conference and see what some of the headlines are. Be very careful if you're trading really anything right now. Anything can happen at one of these summits. And if the wrong attitude or the wrong tone hits the markets, all I'll say is anything can happen. All right, everybody, I want to thank you for joining me today. The week ahead, it's going to be an interesting one. We're going to really set you up with the Forex pairs. We got a Forex strategy session tomorrow. We're going to be talking about the RBNZ. Any pairs that you want to talk about, bring them in tomorrow. I'm more than happy to answer the questions and give you my 2 cents. We'll take a look at that 920. The 920's been on a roll. It's been pretty hot lately. So we got that dollar yen 920 open. We've also got that Ethereum trade, which is really starting to look very good. We just got to wait and see how that pans out. But really, until next time, just trade well, but be careful. It's Monday. We got good Monday psychology. We don't want to give anything back. Don't start the week in a hole. If you haven't done anything just yet, maybe just get ready for tomorrow. Remember, we can make more money in just a few minutes when trading when we should be trading, as opposed to trying to force it into a real tough session. And that's exactly what we got going here today, guys, a real tough trading session. All right, let me see. Eli, I got 2008. Thanks. 2008. Yeah, it's not bad. Not a bad pullback. I would, it's the Great Britain pound Aussie sort of flat right now for the day. You got a doji setting up, but it's not necessarily a bad trade. We could definitely get a big runner. It just depends on what happens with our news feed. That's all. We got some news facing the Great Britain pound later this week. I believe it's UK CPI's out, EU CPI's out. Australian dollar, we're going to be watching gold. You'll notice not much is happening in the gold market. The Aussie sort of doesn't have that extra oomph that it had a while back. So let's just be careful and be patient with what you've been doing. All right, everybody, I'm going to go ahead and bang on. You guys have a fantastic trading day. You're welcome, Lita. Thanks for joining us again today. Be back tomorrow, same time, and we're going to go ahead with the Forex strategy session, RBNZ interest rate decision in view. If you have any questions at all, be sure to head on over to howtotrade.com. Send me a private message. I'll get you set up. And also, if you're looking for a broker, Switch Markets is the ticket. So go ahead and head on over there. Zero commission accounts, tight spreads. You got an opportunity to get up and running in the market in just minutes with the reverse KYC program. If you have questions on any of this stuff, just go ahead and reach out to me, and I'll give you the lowdown. All right, guys, have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.